Good afternoon, MMTs and our traders around the world. This is the chart of the S&P 500. And we clearly made it clear, more than clear, that there was going to be a good size correction and to get short the market. Here, you're going to be able to find here, right here, stockmarketfunding.com, bulls versus bears. This is done before the fact. This is not after the fact. You can take a look at your indexes, all done before the fact, not after the fact. Go here, watch the live videos, and if you want to trade, you get with this. It's all before the fact. The analysis was done before the event and why it was going to go down. So go up here, click on your free trial tab. That's number one. Once you do that, hit get started today. So here's what I'm going to do. I'm going to go right back up here, and I want you to know that you could go open an account. Yes, you can open an account. Watch the video. Watch, open an account. Get started. We will give you trading capital to trade with, so you'll get funded. Read the videos, watch the content, everything. You won't have the pattern day trading rule. You'll have the best execution systems ever in the world. So let's get back to the S&P. Today is 10/1, October 1st. We talked about that high, and we talked about this volatility that was taking place right here. That's a 100-day simple moving average. S&P 500 right now, right this very minute, has a daily sell signal right here on this chart, right here, right now. Daily chart, right there. We also said that we needed to come down here to 1900, and that the bull and the bear were really fighting it out. Up day, down day, up day, down day, but you were going to collapse. Yes, you were. You were going to collapse. Another thing I want to show you before the closing bell now is the Dow Jones. Here is the daily Dow Jones. I'm going to pull up my trend tool, MMT, and what we're going to do is I'm going to clear those, which I did. This is done on a daily chart. We start with the bear and the bull count. This was a support level that these markets for day after day after day refuse to break. We make an all-time high, then we gap down, there's your big day, but this big selling was there in the Dow and it was going to catch up. I can tell you right now that this is a huge down day, and once these corrections get done, then we're going to go buy the broader part of the market. So just for today so far, we opened at 17,041. We are now at 16,784 on the low. We were down roughly 250 points. Right there, the Dow is down 226, and it's bouncing a little bit. Based on all of the problems, let's take a look at the NASDAQ composite. NASDAQ composite's coming to that 100-day moving average. That 100-day simple moving average. And that's heavy related internet tech stocks, high risk, risky stocks. But other stocks are being sold. We have a daily sell signal, which we haven't had forever on this NASDAQ composite. And we were fighting. The bull was fighting right up here in different areas. So basically, this is where we're going to get support at, down here. And we're going to see what happens at that 100-day simple moving average. That's the update right now. And the time is 11:25 a.m. There's still another hour and a half left of these markets. And listen, we are short. We got put options that make money. We did all of the analysis for everybody, all our traders around the world. We fund your trading account with our dollars so that you can trade intraday in our market making division. Take the time to see the analysis done over the weekend and the prior week, and that this correction is a good thing because there are stocks that are going to bounce off the bottom lows. Once again, NASDAQ composite has a daily sell signal. S&P is at 1950. It's selling down with the sell signal. Once again, through that 100-day simple moving average on the S&P 500. And once again, on the Dow, We don't have a sell signal yet, but it's breaking down through the 50-day moving average, which is the white line. This here is the 50-day. That line right here, that color right here, that's what we call a 100-day. You got the 40, but you got the 10 and the 20. This is a big continuation breakdown that high frequency algorithms had ran all of these things forever to the highs. So we're going to see what the last hour and 30 minutes are, and we're going to see if the bargain hunters come in and start buying up as we go in. I will update. I'll put this on pause. Right now the time was 11:27 a.m. 10/1, October 1, 2014. Here it is at the closing bell, 1 o'clock p.m. And we had clearly showed here that S&P 500. And this high was where the reversal came in. This is where we called to buy put options. We rallied up to this high, and we came down, and they rallied up, and then they kind of consolidated, and then once again the tops could not get taken out, and straight down we went. So the S&P closed at 1946. That was down 26 handles. The Dow Jones is down 237 handles. And the NASDAQ composite ended down big. And so we'll go ahead and go over to the Dow. And you can see it right here, once again, that during the last several days, we had called for a significant pullback. Because that's exactly what we did. And it's on the website. And you can see it right here on this diagonal trend line. Looks okay. So this was pullback one. We rallied. We made another lower low. We consolidated, and remember, it's a 60-minute chart. That pivot point didn't want to break. And the thing about it is you have these 60-minute sell bars, and that means that the bull is going to come back into this market as soon as they flush out the rest of the sellers. So that's what the Dow looks like. And we can tell you right now, that's a 60-minute review of it. The NASDAQ composite, they all look the same. Remember, the NASDAQ is heavily weighted with biotech stocks. They got internet stocks, lots of technology in there. But you can see the same pattern, and then you can see today on this 60-minute, there was no bounces. People were thinking it's okay to buy the dip. Yeah, okay. Every time they bought the dip, they got a French dip. And guess what? The markets ate them up alive. So what I am saying is the following. One of the things that I want to show on the weekly chart, this is a weekly chart. And I am just going to show it once again that this bull run has been extremely strong for a change. And like we always tell people, there's a time to be long and there's a time to be short. This is a weekly consolidation. We break out to the high. Then we had this little correction in August. One of the things that I want to be very clear about, we have broke below the 10-week simple moving average at 1973 on the S&P. That's the blue line. The red line, you can see how it likes to bounce off of the 20-week, but guess what? It's selling down through it. And the 20-week simple moving average is 1963, and we closed out right here. This is where we closed out. So we've had 2 weeks back-to-back selling. Then we went through just like we did over here. But you can see that these weekly reversal bars to the downside are pretty big. And I can just tell people one thing. Since 1929 on that S&P, October is meant to set up new buying opportunities. So we are going to have the same amount of upside volatility as we do the downside volatility. And not only that, as the fear indicators get greater, then we are going to say when it is time and when it is safe to buy the dips on the good quality stocks. We've got earnings season coming out in 2 weeks. Stocks have been overbought for a number of weeks, And it's actually good for the market to have a decent bear raid on the downside, and then the bull raid will come back in and break out higher. You know, it's always healthy for corrections. Get your shopping list together and say ha-de-da. So basically, I want to just close it out. The NASDAQ is below that blue line. NASDAQ composite, that's a 20-week, sitting on the 20-week, the red one, right here, right here, right here. You've seen it. Now on a Dow, it's just now starting to break below the 10 and the 20-week moving average. And we have clearly said that the 50-day simple moving average is at the simple weekly moving average is going to be at 16,456 on the Dow. That white line is a very significant support level. What do we call that for the Dow? Yeah, I will tell you what we call that. This is what it looks like, period. And the 50-week moving average is a white line down here. The Dow, it would be healthy for it. We started to sell through it, but we'll see if the bull wants to come back. Technical levels, technical damage has been done.